morning. Well, thank God it's Friday. Not just Friday, it's the final day in the month and the final day in the quarter. Very soon we'll have to do some stock taking and see what we've achieved or not so far. That's food for thought. Well, let's make the best use of this final 55 minutes that we have for this week on Business Morning. I'm Amy John Mekwa, so we get right into it now with oil prices. They were very slightly down in Asian morning trade as bullish sentiment about Chinese demand and potential Middle Eastern supply disruptions was tempered by uncertainty over U.S. economic data. Brent futures, which have risen nearly 6% this week, were down 19 cents at $79.08 a barrel, while U.S. West Texas Intermediate crude futures was down 1 cent, that's 0.01%, to close at $74.36, having gained about 8% this week. Prices have ticked up this week over optimism surrounding China's economic recovery. China's manufacturing activity rose in March at a slower pace compared with a record-breaking expansion in February, but still exceeded expectations. If industrial activity in China has become a key determinant of prices in recent weeks after its ending of coronavirus-related restrictions amid weaker global demand. We move over to the commodities market now. Chicago soybean and corn futures slid on Friday as both markets were poised for a quarterly drop with a focus on a U.S. government report on planting intentions, which is due later on today. With ease set to end the first quarter of 2023 on a weaker note, the most active soybean contract on the Chicago Board of Trade was down 0.2% at $14.71 for a quarter of a bushel. Corn gave up 0.1% to $6.48 for three-quarters of a bushel, and wheat also down 0.8% to $6.86 for half a bushel. We come to Nigeria now. Not very good news, as the country's total public debt stock, which includes domestic and external debt of the federal government of Nigeria and subnational governments, rose to 46.25 trillion naira. That's about $103.11 billion in the fourth quarter of 2022. And it went from 39.56 trillion naira the first quarter of 2021. According to the Debt Management Office, total domestic debt stock was 27.55 trillion naira, while total external debt was 18.70 trillion naira. Amongst the reasons for the increase in the total public debt stock were new borrowings by the federal government and subnational governments, that's the state governments, primarily to fund budget deficit and execute projects. Well, I can tell you that in the coming days, we're going to dwell on that. The issue of debt obviously is not new here on Business Morning, but it's a major challenge for the country. It's supposed to hit 77 trillion naira by the time this administration is handing over to the next one. So it is worth taking a look at again and again. Now, talking about the incoming administration, now we have this report that captures some of the expectations of Nigerians. This time we're doing it from the southeast. As the new governors take their seats or prepare to be sworn in, they're getting their certificate of return. A lot of them did that yesterday and the day before. The people of those, the residents of those states, have been speaking up their expectations for the new administration and sometimes for renewed administration. Let's hear what they are expecting.
Infrastructure development to drive economic growth, social welfare for citizens, and the provision of adequate security for lives and property form part of the primary responsibilities of any government. These expectations influence the choice of candidates citizens supported and voted for in the just concluded governorship election. As winners have emerged and the people now know their incoming governors, the electorate can't wait for the May the 29th handover day to see the new administrations hit the ground running. In Enugu State, the coal city, the PDP governorship candidate Mr. Peter Mba emerged winner in a keenly contested election. However, one of the major challenges residents are expecting him to tackle headlong is a perennial water scarcity, which has been an issue for decades due to the topography of the state.
we have been having problem with water problem. Our tap has not been running. Please, I would like you people to come and look into our problem and solve it. We are suffering from water. Even in the midnight, we are walking. If I go back from here now, start looking for water.
Even though there is no significant improvement yet, the current administration had commenced comprehensive rehabilitation of the 9th Mile Crash program with solar-powered boreholes to ensure adequate supply of potable water from Oji River, Ajali and Iva water schemes to Enugu metropolis. For the incoming administration of Mr. Mba, he promises that within 180 days in office, the perennial water challenge will become a thing of the past.
Let me pledge to you once again that I will serve you and dedicate every of the 1,460 days that make up this initial tenure of office to serving you. As we bring water to all homes in Enugu metropolis in 180 days of our being sworn in.
In neighboring Ebonyi State, the present Speaker of the State House of Assembly and APC governorship candidate, Mr. Francis Nwifuru, is the governor-elect. By the people's assessment, it appears the present administration has arguably done well in the area of physical infrastructure, but the people want the incoming government to focus on tackling the problem of insecurity, provision of quality and affordable health care, among others.
I would like this coming government to tackle the issue of water. Water is a necessity. Whether you have money or not, you should be able to drink water. So I would like him to tackle the issue, give us potable water. And you know, don't forget that Ebonyi was endemic. The issue of guinea worm is still there. So that we should not go back to what the former president of America, Jimmy Carter, helped us to solve.
Number one area is peace and security.
According to the governor-elect, he will leave no stone unturned in addressing the challenges affecting the people of the state, even as he promised to continue on the good legacies of the present administration. The incumbent governor of Abia State, Mr. Okezekwe, failed to secure a successor from his fold as his party's candidate, Mr. Oke Ahiwe, lost to Dr. Alex Oti of the Labour Party. With the level of fanfare and jubilation that greeted the declaration of Dr. Alex Oti as governor, expectations are high. The people of Abia State want the incoming administration to look into the state's debt profile, address issues relating to salaries, accumulated pensions and arrears.
We need somebody who will look into the boss and now know that already the state is indebted. But to the tune of how much the state is indebted, for now, government is yet to explain. So other things, the infrastructures, government said they have been able to, especially in the educational sector. The government came up with in bringing in the old boys into, see how you can restrict the educational system.
The governor-elect, Dr. Oti, promises to ensure adequate and prompt payment of salaries and pensions and the provision of quality infrastructure.
By the end of this year, every outstanding salaries and pensions would have been decreased.
Promises made, hopes are high. All eyes are now on the incoming administrations to change the narrative and deliver good governance to the people. And hopefully, after 4 years, it can be said that the mandate given to them was worth it.
Well, making the mandate worth it is one expectation from Nigerians from different states and even from the federal level. And of course, Channels Television is always here to bring those stories to you. Are they keeping to their promises or not? Well, one other company we can hold to their promises, Dangote Industries Limited. A couple of days ago, we saw that listing of 300 billion euro, opening the floor for members of the public to participate in the growth of Dangote. Well, we want to talk more on that and the impact it can bring to you with Mr. Funsho Akere, Chief Executive, Stanbic IBTC Capital. Mr. Akere, good morning. Thank you so much for your time. How has the response been so far since the listing of that 300 billion naira bonds?
Good morning.
How has the response been so far, Mr. Akere?
Yeah, so I think it's look, I think the market obviously the two things. I think first is, for people who are companies that are looking to tap the domestic debt capital markets to raise financing to fund their, projects. This is a clear signal to them that the domestic debt capital markets are deep enough to provide the required financing. And then obviously on the other end, investors who are looking for long-term instruments to match their portfolios. So if you look at insurance companies who are writing annuities and looking for longer dated instruments, the 10-year bond, for example, gives those investors that opportunity. Same for pension funds who are looking for longer dated instruments just because of the nature of the assets that they have. This obviously is a welcome development. So overall, I would say that the market response has been very positive. It's not surprising because Dangote Industries has been at the forefront of deepening the market, whether it's the equity capital market or the debt capital market.
So what are the requirements, what are the categories of people participating in this bond?
Yeah, so there was wide participation from a diverse universe of investors. We had, the domestic institutional investors comprising your pension funds and asset managers. We also had insurance companies participate in the bond. We had, mutual funds participate in the fund. We had, HNIs, qualified HNIs participate in the bond issuance. I think it's important to note that the program size was 300 billion, and there were two issuances under the program. The first issuance, was 188 billion, and under that issuance was a 7-year and 10-year bond. And that is the largest bond issuance in the history of the Nigerian capital markets. And then the second, which was utilizing the balance of the program, was 112 billion, and that was a 10-year fixed rate bond. So that gave investors, like I mentioned earlier, access to 7-year paper and 10-year paper, with a very solid credit quality.
All right. So on the other hand, what difference do we expect this 300 billion naira to do to the company? We do know that Dangote has a lot of ongoing projects. What difference will it make? How does it impact the company?
Yeah, I think, every company wants to have a funding plan that is diverse. You want to be able to go to the market, raise funding from banks. You also want to be able to raise funding from investors. Now, what this has done for Dangote Industries is it's giving Dangote Industries, a wider universe to raise, the funding that it requires to implement the projects. And, Dangote Industries has been at the forefront of implementing projects that are instrumental to the development of the Nigerian economy, or that cut across various sectors of the Nigerian economy. So it's a positive development.
All right, we'll look forward to this positive development and to affect some of those projects. Those projects that Nigerians are looking forward to, we do hope it will speed up, the implementation of it. But thank you so much, Mr. Funsho Akere, the Chief Executive of Stanbic IBTC Capital. Enjoy the rest of your day.
Thank you. Have a good day.
All right, now let's talk about something that affects Nigeria and Africa, and that's the AfCFTA. Trading under the African Continental Free Trade Area, AfCFTA, commenced on the 1st of January 2021 with the intention of boosting intra-African trade to accelerate growth and facilitate investment on the continent. Now, there have been news on implementation in Kenya, in Ghana. There have been even, cross-border relations. Now, what about Nigeria? Recently, Nigeria's Vice President, Professor Yemi Osinbajo, affirmed his confidence that AfCFTA will do the continent a lot of good. Let's find out from the perspective of Anna Ekeledo. She's the Executive Director of AfriLabs, and AfriLabs does deal with businesses that are supposed to be participating in AfCFTA. That's why we have a good morning. Thank you so much, Ms. Keredo, for your time this morning.
Thank you. Thank you. I'm glad to be here.
So what's the updates? A lot of times I see stories from Kenya, from Ghana, outside Nigeria, on how they are working on maximizing the platform, the AfCFTA platform. The last I heard of Nigeria, we had a committee that was supposed to set boundaries and some of those guidelines to the implementation. What's the latest now?
Okay, so the African Continental Free Trade Area, Nigeria ratified it in 2021, and that's where all the countries, most of the African countries, agreed to, move forward with a plan. So as you've said rightly, other countries have been quite active in rolling out implementation plans, which Nigeria is currently doing. So at the moment, the government is working on a national plan to ensure that businesses take full advantage of the Continental Free Trade Area, while also ensuring that our industries are well positioned with the right, tax incentives, with the right sector development, across various industries to take advantage of the free trade area across Africa. Now, if this is done properly, Nigeria stands to gain over $12 billion and even possibly capture at least 10% of the global trade, of intra-African trade. I mean, these are really big figures considering the fact that at the moment, we all know that intra-African trade really represents a small percentage of global trade compared to Africa trade with other countries. Now, with Nigeria being one of the largest economy in Africa, we are poised to be the leading country in terms of intra-Africa trade.
All right, so being the leading is one thing, but actually leading is another thing. Do businesses, private businesses, do they have to wait for all of these guidelines before they start using it, or can they go ahead and maybe have a one-on-one private-to-private sector relationship with companies or businesses in other countries to, make use of this AfCFTA platform?
So very practically, businesses can go ahead to begin to have the conversations. And that's one of the things we do at AfriLabs. So AfriLabs is a network of innovation and technology hubs across the African continent, 52 African countries. And what we basically do is support startups and businesses to scale across the continent, right? So this is already happening. We already have these conversations on trade. We already have businesses scaling from one African country, Nigeria specifically, to the other. We've seen over the past couple of years really successful businesses that have started out in Nigeria but have set up operations and traded with other countries. However, there's a limit to which businesses can do this on their own, right? So for example, when we look at financial services, fintech specifically, in order to operate from from your country, let's say Nigeria, and operate in another country, you have to pass through the regulatory guidelines of the other country, right? In other words, you have to go through the central bank of the other country, you have to deal with the licenses and any other regulatory policies that have been set. Now, because a lot of our policies across the continent are not harmonized yet, so yes, we've signed on to the 90% tariff barriers, but there are what we call the non-trade tariff barriers, right? So these are the licenses that need to be gotten. These are issues around ease of movement. We know that from Nigeria with your Nigerian passport, if you need to move to other African countries, for most of them, except a few like Rwanda and the likes that have really opened up their border, you still need to go through a rigorous visa application process. These are some of the things that are cause barriers to trade. Then there's also the interoperability of payment solutions. So you know, if we need to make a payment from Nigeria to another country, for example, it has to, you know, be pegged by the dollar, and then there are delays and all of that. But then, I mean, I'm quite excited that even on a Pan-African level, there's a Pan-African payment settlement system that is being developed, you know, that has been launched actually. But then Nigeria needs to also key into that to ensure that Nigerian businesses can take full advantage of this. So yes, businesses can go ahead and have those conversations. Yes, there are governments that are you know, supporting the process. However, Nigeria needs to, you know, be proactive and really lead the way in breaking down all these other non-tariff barriers and forming stronger collaborations and ties to ensure that it's easy, you know, to operate from Nigeria, to trade from Nigeria to other countries without all the regulatory bottlenecks that businesses face.
So since you are dealing with a lot of these businesses, I guess it is safe to say you can be their voice. What are you doing? Are you talking to the government? Are you interacting with the committee, for instance, that is supposed to help remove most of these bottlenecks?
Yes, we are talking to the government. We're very active in that. Last year, for example, we launched what we called our AfriLabs policy pathways, which is very instrumental in even guiding the government on the things to do. So with our policy pathways, we have prioritized 10 policy areas which will be needed to ensure that businesses take advantage of the African Continental Free Trade Area and in a holistic way, right? So when we also look at trade, we also have to look at infrastructure, right? So digital infrastructure, for example, is very important because if people are going to take advantage of, you know, getting access to markets, for example, you know, when we look at small businesses, we talk about the businesses, big businesses and tech startups and the likes, but what about the MSMEs and the likes, right? Leveraging on e-commerce platforms, digital payment systems, access to market, digital marketing, these are all the things that they can use, the tools and technologies to really scale and trade across Africa from Nigeria. However, the right digital infrastructure and access to affordable internet needs to be in place. Now, with these, we are speaking to governments. We actively engage in committees. I'm personally a part of a Nigerian committee under the Vice President focused on building the tech and creative business environment as well. We also work with other governments like Zambia and Rwanda, for example, and even Algeria to, you know, come together and see what harmonized policies these countries can sign up to, you know, under the CFTA.
So talking about harmonizing that strategy, the issue of comparative advantage, because some countries feel threatened, oh, this country will take the markets and we'll just be left with the bones and things like that. How do you get them to focus on their area of comparative advantage so that at the end of the day, the basket gets fuller, you know, with better quality commodities if everybody focuses on their area of strength?
Yeah. Thank you. I think well, two ways this can be looked at, right? So one, of course, identifying different comparative advantages of the country. So going through a very in-depth analysis of what sectors, for example, countries can really focus on across the value chain. So if we look at agriculture, for example, a lot of countries, and Nigeria particularly, is very rich in agriculture, right? But then agriculture doesn't just start and stop at the, you know, at the produce itself, right? So there's a production, there's a processing, and then there are all the other value-add services that can be added across board. Now, these could be gotten from, you know, different countries, right, across the value chain. If you look at leather, for example, that's another industry, for example, where we have different parts of the value chain that different countries can contribute to. So that's one way, you know, and really, so first doing an analysis of the, you know, where each countries have their strength in, and then coming together to see how, you know, with a harmonized or a collaborative process, we're all contributing to the value chain, we're all trading with each other, and then we're opening up markets outside the continent, right? So intra-Africa trade is very important, but we also need to realize that there's also a larger market out there, which is already happening. I mean, Nigeria, for example, is one of the largest exporters of quite a number of produce outside the continent. However, that value add and the processing isn't done before it leaves the continent. That happens a lot with other countries like Ghana and cocoa, for example. And, you know, you can pick up all these examples for other African countries. But if we come together and say, let's work together, a country might, you know, be the strength, bring in the natural resources, other the processing, other the human capital. That's another thing. We need to really invest in human capital development. Other maybe the sophisticated financial systems. Whatever it is, let's come together and see how, as a continent, we can also open markets to other continents and trade, you know, with Europe, with Asia. But we can only do that if we come together, because, you know, working on an individual level, there's only so much each country can do on their own. But if they come together, that would not only facilitate intra-Africa trade, but inter-Africa trade with other continents as well. And then everybody benefits, right? So we are, even right now, the CFTA is bringing together over 1.3 billion people and over $2 trillion. But that can be doubled, right, in the next decade. But that can only happen if we come together and collaborate.
Yeah, coming together. I mean, it seems one of the hurdles is also the issue of regulatory authorities. I mean, speaking from Nigeria's perspective, that's what I know best. Customs, you know, getting the goods across the borders. That has also been a source of complaint coming from a lot of business people who attempt to export. How much hope do we have of that being handled quickly, for instance?
Very candidly, political will, you know. These are issues that can be solved, right? If we set ourselves really strong targets and say, look, on a normal day, it takes, let's say, any time between 5 days and 6 months. I mean, we've heard of the really bad cases of people losing the value of the goods by customs, you know, by the custom area because of the bureaucratic systems. But if we set really high targets and say that we're going to have a minimum processing time at the customs and all the other challenges, you know, that are faced can also be looked into, you know, even with technology. Now we have technology, for example, that are providing solutions for more seamless processing, for example. And there are other hard infrastructure as well. So other than technology, about in 2012, for example, the government actually approved about 6 dry ports across Nigeria. And the purpose of these dry ports, I mean, are meant to decongest the seaports, right? And then some of the goods from seaports, you know, taken to the dry ports so that they can be faster processing and all that. As of today, as far as I know, only Kano. I know Kano was launched earlier this year, or was it last year? And we have the other states, for example, that have not been developed yet. If that project, or those projects, for example, which have been approved through a public-private partnership, can be set up, you know, we have another in Abia State and others, you know, that still need to be developed. If those projects can be completed, for example, within the next a year, you know, and that can be done, then we would see a significant improvement in the challenges being faced with, you know, products being held on the seaports, and we'll find it easier to even transport goods from Nigeria to other countries. I know with Kano, for example, the idea is to move the products to other regions north of Nigeria, other countries north of Nigeria, and that can be done, you know, in each of the region, the eastern, western part, southern part of Nigeria and the like. So these are some of the very practical strategies that can be used, you know, technology and other strategies, but there has to be political will. There has to be really high target sets, and it's very doable. And I have hope, you know, that it can be done. Yes,
I have hope too. I have hope, and we hope our hope will become reality very soon.
We hope so.
Yeah, thank you so much, Anna Ekeledo, Executive Director of AfriLabs, and please do push further and harder for our hope to become reality, speaking to the government or that committee, you know, to bring this to come to pass, because sometimes it kind of feels sad that you see other countries, you know, using that opportunity or platform, and then the most populous country where we have the biggest markets, we are hardly doing anything like that. But thank you so much for your time and your thoughts this morning.
Thank you.
All right. You're welcome back to Watching Business Morning here on Channels Television. The ease of doing business, that's our next focus. Nigeria ranked 131st out of 190 countries in 2019. Economies ranking from 1 to 20 have simpler and more friendly regulations for businesses. In Africa, the best country for doing business is Mauritius, not Nigeria, which ranks among the first countries worldwide. Well, the latest report now from the Presidential Enabling Business Environment Council, PEBEC, has placed Nigeria's commercial capital as our host state, Lagos State, and the Federal Capital Territory, Abuja, below average on the ease of doing business rankings. The state reports indicates that Lagos dropped 9 places to occupy the 29th position, having ranked 20th in the 2021 report, while the FCT fell to 31st, having ranked 17. What's going on in Lagos and Abuja? However, Gombe, referred to as the Jewel of the Savannah, recorded a weighted score of 7.15% to emerge as the state providing the friendliest environment for business. Let's get the perspective of Dr. Samuel Ibrahim. He is a senior manager, tax advisory and regulatory group with Anderson. Good morning, Dr. Ibrahim. You're a tax man. Is it because you're a tax that's making Lagos rank really low? I mean, 29 is not impressive at all.
Thank you very much. Many thanks for the opportunity to join. So the report is quite interesting, you know, because it's a peer report for states in Nigeria, and it's been done by PEBEC. You know, so the World Bank ranking for countries has since stopped, you know, and PEBEC had taken the initiative to start a national report, you know, that ranks states, you know, pretty much. Basically, now, so I need to give some perspective to it with respect to the ranking of Lagos and the FCT, you know, that dropped significantly. So first off, we have many other states that are trying to make improvements and are being intentional, you know, with particular reference to the indicators that are the focus of the report, you know, things like infrastructure, secure and stable environment, transparency, access to information, you know, regulatory environment, economic opportunities, then skills and labor, you know. So they've been very intentional in making improvements in those areas relative to other states that have not done very well, you know. But there's another perspective to it, which is the fact that, you know, states like Lagos, you know, and subnationals like the FCT are bigger and more complex spaces, you know, and you have more population, you have more mix, more diversity, you know, so all of that comes into play in their performance in each of these various indicators, you know, but that's not an excuse for these states, you know, not to do better. And I do believe that this report is a wake-up call because, like they say, unto whom much is given, much is expected. You know, so much is expected from the big players and the big states in terms of economy, in terms of, you know, capacity. Yeah.
All right. So when we look at the details of that report, we see that PEBEC considered issues like taxation, security, the time of response, infrastructure, electricity, and we see, for instance, infrastructure. You have a lot of federal roads, electricity, where we're waiting to see the impact of the new law, which allows states to provide the generator. You know, so some of these things actually lie with the federal government. So why should PEBEC put it like on the states when it is more of a federal government in most of this case. Security is the federal government. Infrastructure, majorly federal government. Electricity, federal government. Tax, of course, the federal government also have their contribution, but of course the states also have their contribution there.
Yes, brilliant question. Thank you very much. Again, now what PEBEC had done, they had categorized infrastructure into soft and hard infrastructure. Originally, based on their mandates, they should focus on soft infrastructure, things like the regulatory environment and other drivers of ease of doing business, right? But for the report, they still made a detour to consider some elements of hard infrastructure, was brought into the indicators or the sub-indicators. And the reason why they did that, and you're spot on, with respect to the fact that the federal government has jurisdiction over those areas. Most of those items are in the exclusive list, and electricity, for example, was just, pushed into the concurrent list, right? However, there's a whole lot states can do within the electricity space. For example, federal government handles rural electrification, but state governments can equally make investment in those areas, provide some of the infrastructure, see that they reach out to the discos, to support them, regarding getting more electricity wheeled to their state. And most times discos have challenges in supplying states, where they realize that they're unable to make recoveries because of low metering and things like that. So state governments can be proactive and get involved in some of those things, put policies in place, take executive actions, make collaborations in a way that will raise their profile. If, for some states, they get as little as 3 hours of electricity in a day. Some other states have an average of 10, some others have an average of 13. So states will need to make efforts, particularly the executive arm, to reach out to the providers of these services and partner with them in order to improve supplies to their locations. Transportation, for example, you're spot on. It's largely some sectors within subsectors within the transport sector are exclusive to the federal government prior, like rail, and air. But state governments can still play, some part. Some state governments had started rail projects like Lagos State, the Blue Line. We also had the River State one that installed, the monorail. So you can see some activities by states within that space. In terms of air transport, states can also play part in building airports, working with FAN, working with the key federal stakeholders there, building cargo airports too, and expanding infrastructure within their state. So to that extent, they have some responsibilities, and that should be factored in.
Yeah, so I said that to say that, because when you look at the ranking of Nigeria as a country, we're not doing so good anyway. We're looking at 131st out of 190 as at 2019. And of course, this places, this brings eyeballs back to the federal government. So perhaps the federal government should lead by example.
Absolutely. Yeah, I'm speaking to that. We've been doing poorly, but good enough. The ranking of 2019 was even better than prior years' ranking. And kudos to PEBEC. They really did a lot of work at the federal level, through institutions like the CAC, FCCPC, and the likes. So that helped our ranking significantly. But unfortunately, the World Bank stopped doing the national ranking, so we do not have clear visibility in that area. But I would, connect that to the ranking, because this current report also has a national ranking for Nigeria, compared to 2021 when the first report was issued. And there was just marginal improvement in terms of performance, because in all the other indicators, there was a decline in terms of collective performance of the states put together. The improvement was in just one area, which is in transparency and access to information. But in every other indicators, infrastructure, security, regulatory environment, there was still a dip, a marginal dip, and that's a call to everybody, the states, the federal government, in fact, the local government, for everybody to become more intentional and deliberate. PEBEC has done a lot of work, and kudos to this administration. And, this is a message to the incoming administration that they probably will need to raise the game and do much more, in terms of these reforms. But I would want to mention, something that is a pattern with reforms. For most reforms, you're likely going to see a dip in performance, and that will then engender significant improvement within a short period of time. And for countries, for example, that are, having climate change ambitions, to tell you that in terms of their performance, with dirty energy, they expect to see themselves performing significantly poorly, for a period. And after, say, 5-6 years, then improvements will start, and there'll be so much clean energy in the space. So I think it's a common trend with reforms, and for most states, they're putting in a lot of work. PEBEC is putting in a lot of work, so maybe we're seeing that kind of curve. I hope it is, and with more efforts, we're likely going to see improvements.
All right, let's stay hopeful once again. Our second guest calling for hope, Dr. Samuel Ibrahim, Senior Manager, Tax Advisory and Regulatory Group with Anderson. Thank you so much for your time and thoughts this morning.
Thank you.
All right, we'll stay hopeful and believe or hope that the next administration will, raise the bar higher than what we see, both through PEBEC, infrastructure, AfCFTA, and every other thing. But now let's head to the markets with Will Ibong, and she walks in with, I believe, good news today.
Good morning, Nini.
Good morning.
Yes, I'm coming with good news because the NGX is trading with very positive
However,
performance.
it sounds like an however is coming up.
No, there's no however,
Okay.
Because I'm sure investors are done rebalancing their portfolios and they are now positioning for, to earn dividends.
Yeah, it's the end of the first quarter.
Yes, we've seen dividend, announcements coming in, and investors are really positioned right now. So I think the NGX is going to be trading a bit higher, all through the week, at least. Today's the last trading day of this week.
Become a market prophet.
So we saw, but we're going to kick off with the bonds market, where we saw proceedings in the bond market bearish now. Yields are beginning to trend in that space. The yield rose in the bond space by 14 basis points to 13.2%, and across the curve, we saw average yield rose at the short, the mid, and the long segments, as market players sold off the March 2024, the April 2032 papers, and the April 2049 bonds. Now, on Treasury bills, however, we still saw bearish sentiments in that space as well. Yields are going up. Average yield expanded by 4 basis points to 5.9%. Across the curve, also, we saw the yield closed flat at the short, the mid segment, but it rose at the long end. And we saw that play out in the NTB auctions, the primary auctions that took place on Wednesday, and due to sell-offs in the 343 day to maturity bill. But we're going to bring in Ifeoma Onyejek, which is a fixed income dealer, UBA, to give us more insights as to what's going on, what's driving the market, and what sentiments investors are playing with this week. Good morning, Ifeoma. It's good to have you on the program.
Good morning. Thanks for having me.
So we're seeing a good performance in terms of yields, for the fixed income market. Now, give us a picture. What's the liquidity like currently, and how has that impacted on yields that we're seeing right now?
Well, system liquidity has been in a repo this week at an average of over 500 billion. So the bond auction debits from last week and also industry CRR contributed to this system illiquidity. That's why yields have been very, very high. So yes, like you're very, very correct. Because of that, we've seen money market rates be at high levels of at 18% and 19% levels. And even in the fixed income space, it also contributed to the high yields in that space.
So talking about the NTB auctions, tell us about that. We saw that it was oversubscribed at the long end of the curve there. But the yields, yields was also very high, hit the 14% levels. But we saw that for the other 91 and 182 papers, there was not much going there in terms of what the total subscription, what was offered and what was allotted was not, was lower than what was offered.
Yes, you're very correct. The stop rates really took market players by surprise, and then the preference for a lot of financial institutions is the 1-year bill because of the higher yields. Yeah, it really did take us by surprise, and then but we saw that subscription was way more than what was offered. That was because people were expecting high yields, but they were not expecting it to go as high as it did, 14% levels. That's why there was high level of interest at the auction.
So what would you say that investors will be, how do you think this high trend in yields will be sustained? Do you think we're going to see that?
We're going to continue to see the high yields until the middle of the month in April. That's when we expect bond coupons to trickle in, and also the last week of April where FAC payments are expected. So yes, from now until the middle of April, we're expected to continue to see high yields.
And so what's the outlook? In terms of borrowings, maybe looking at in May, in the short to medium term, what do you see investors doing or playing? In what end of the curve will investors be looking at, especially for bonds?
Yeah, they'll still be looking at the high yield. When inflows come in, we expect the bulls to be the active players, since no one wants to market players shy away from being debted for CRR. So we'll see the bulls kicking the market. But yes, we expect the inflows to improve and liquidity to improve from April, May, and June.
Thank you so much, Ifeoma Onyejekwe, fixed income dealer UBA, for sharing your thoughts and perspective on the program this morning.
Thank you.
Now we'll move on to the equities market, where bullish sentiments extended from Wednesday's trading session. It was up 1.51% from 0.9%. It closed on Wednesday, and this was inspired by bargain hunting in MTN Nigeria as the big guy. It was up 8.9% yesterday, and as a result, we saw the all-share index, that's the advanced 1.51. 54,000 points, that's where we're currently at, and the NGX, the current market cap is at 29.64 trillion naira, and the year-to-date returns now moderated to 2.5%, still in negative territory. Month-to-date returns is still in negative territory, but the year-to-date returns is now at 6.2% up in positive territory. Total volume traded yesterday, we saw it rose by over 300% to 973.64 million units, all transacted in 3,718 deals valued at 4.23 billion naira. Now we saw banking sector up 1% yesterday. Insurance was also up. Most key indexes recorded gains yesterday, except for the oil and gas index, which was unchanged for 3 consecutive days now. And we're hoping that what's going on there, probably we'll get more insights as it's a developing story. We'll get more insights as to what's going on in that space. Now, the most traded stock yesterday, we saw Transcorp leading that chart yesterday, 455.53 million units traded yesterday. Transcorp announced the 7-kobo dividend. I'm sure investors are probably trying to, get some money in that, get some money out of that. And so there's a lot of buy-in for Transcorp. Living Trust also 354.77 million, and Fidelity Bank up. The units traded yesterday was 143.35 million units. Market breadth was very positive. We saw 23 gainers to 10 losers. That's a good sign for the market. The market is really coming back in, as in, this is what I'm saying. I'm not just speaking, I'm looking at the trends here. Positive market breadth, let's follow, let's sign. Yeah, no. Following the market, and the trends in the market. Not a proper sign.
Yeah, so we'll be looking out for that, what's going on in the oil and gas counter. As you notice, it's been unchanged for 3 trading sessions now. Yes. You have capital market tomorrow, 7 p.m.
That's Ladi. We're going to be doing that. Ladi's going to be digging that up.
Wherever you are, 7 p.m. tomorrow, we're looking for you to tell us what's going on with the oil and gas counter. It's unchanged for 3 sessions, so we need to know what's going on.
We need to know our oil. We need our oil and gas.
Yes. It's what Nigeria lives on anyway. All right, we'll see you at 1:30. All right, so let's go to the crypto space now and see what's going on there. The market is still greedy, that I can tell you. It's a good one. So even though it's a red Friday, but not so red. So we see it going at 63 now. Very greedy. Good time to sell if you want, if that's your sentiment. Now let's go and see the numbers now. The number that we see is the market cap is still at 1 trillion naira, even though it's lost almost 1% in 24 hours, 0.81%. The 24-hour volume also dropped more than 19%. BTC dominance still within the 40%. Wonder what will happen if it hits 50. I know 50% of the market, but 46 points percent. That's what we see BTC dominance, and the price there is gone up to 28,000. Even though it's lost about 2% in 24 hours, it's gone from 27 to 28,000. Don't know what the weekend will hold, but I mean, we'll see what our guest has to say about that. 24-hour volume of $19.27 billion. That's it. And price of Ethereum marginally down in 24 hours at 1,796.82, 24-hour volume at 8.40 billion. Now, today is the last trading, well, not for crypto, but it's the last weekday and the end of the first quarter, the end of the month and the end of the first quarter. Let's take a little bit of a cursor around the first 3 months of the year and see how it's been doing, and we'll do that with Success Chibuike joining us now. Hi, Success. Good morning. So let's have a summary, I mean, from your perspective and what you've noticed, a summary of price movements this first quarter of 2023.
Good morning. Thank you for having me.
Good to have you, Success. Please go ahead.
Okay. For the first quarter of 2023, I would speak on 2 different bases. I will talk of the technical aspects and also the fundamental aspects. So fundamentally, it's been a nice time for the AI tokens and liquid staking derivative and also Bitcoin itself. So at the end of last year, we saw this fear sentiment in the markets, and there was a lot of fear in the market. But just like in the crypto space, mostly at the beginning of the year, there's usually this new hope that comes into the markets. So we saw the price bounce from around $16,000 up to $29,000 as of yesterday. So it has almost moved about 60% increase. So it's been a very nice first quarter, more than our expectations for the crypto markets. So there's also been a lot of irregularities in the markets, like false regulations coming from last year and this year as well. We saw Binance facing a lot of regulations from the SEC and also a lot of fears as well. But at the end of this first quarter, it's actually turned out to be a greenish one. So that's just the summary for fundamentals. Then technically, just like I said, the bottom for this year has been around $16,000. So we saw from May last year, May 2022 up to now, we saw the markets form a kind of a double bottom, and it's making a kind of a W shape. So what I'm going to say does not constitute as a financial advice, but I think we are going to see the price get to the level it was around May last year before the lunar crash. So that's around $32,000 to $30,000. And we are currently in consolidation zone. So I think the price will get to that point.
All right, Success. We'll hold you to your words, and we'll call you back at about May to see where the price really is, if it followed, you know, what you have said. But thank you so much for your time this morning. Success.
Yeah, thank you.
So that's it on the program today, for the week, for the month, for the quarter. By Monday to be a new quarter and a new month. So do remember to join us at 1:30. Will Ibong will be here with updates from the world of business. And for the news at 10, stock market report, that will be coming from me tomorrow. You want to find out why the oil and gas counter has been on change for 3 trading sessions? Laddie Williams will bring that to you. Have a great weekend. Rest very well, because you have what to do on Monday. I'll see you there. Bye-bye.